SEPD TV1 Prediction Stock Price SEPD TV1
2024 year stock market prediction by analyzing Press and Institute report. 1. This is the most well-cited article by Business Insider. 2. Complete rundown in relation with Wall Street's 2024 stock market predictions. Matthew Fox. We know the experience is that after a strong 2023, investors' biggest question is whether the stock market rally can continue next year. Business Insider are arguing the analysis that Business Insider has compiled a comprehensive list of Wall Street's 2024 stock market outlooks. From recessions to bull markets, here's what the top analysts expect for the S&P 500 next year. We have vivid memories. We remember that after a very dismal 2022, stocks surged in 2023, with the S&P 500 and Nasdaq 100 soaring more than 20% and 50%, respectively. It is also believed that a resilient economy, moderating inflation and a potential peak in interest rates have helped investors overcome fears of a potential recession and jump back into stocks. The question is always simple. The question investors and evaluators may be asking is whether the strong market rally can continue into 2024, and whether an economic slowdown and subsequent stock market crash is imminent. Business Insider has compiled Wall Street's top predictions for the stock market in 2024. From a recession to an ongoing bull market, here's what Wall Street expects to happen next year. 3. We will refer to BCA research. 300 S&P 500 price. It is a target price, bearish. Always the S&P 500 is future indicator. The S&P 500 could experience its worst slump since 2008 next year as a recession sets in, according to BCA Research's 2024 outlook. Recessions in the US and the euro area were delayed this year but could not be avoided. Developed markets, DMs, are still on a recession path unless monetary policy eases significantly. So the risk-reward balance remains fairly tight for stocks. It's at a disadvantage, the study said. If the Fed cuts interest rates quickly, the stock market could avoid such a sharp decline next year. But BCA Research is holding its breath because it doesn't expect inflation to fall quickly. While we remain in the disinflation camp, we do not expect inflation to slow quickly enough for the Fed and ECB to cut interest rates in time to prevent a significant rise in unemployment. Unless a recession is imminent or inflation collapses completely, we do not expect inflation to slow significantly. The Fed is unlikely to cut interest rates, BCA Research said, adding that it will probably do so before next summer. BCA Research predicts that the S&P 500 will ultimately rise between 3,300 and 3,700 due to future economic conditions. 4. JP Morgan, bearish, S&P 500 price target of 4,200. JP Morgan said there was little confidence that stocks would rise further in 2024 due to high stock valuations, higher interest rates, weaker consumers, increased geopolitical risks and a potential recession. We expect softer consumer trends to create a more challenging macro environment for equity markets next year, with investor positioning and sentiment largely reversed, JP Morgan's Marko Kolanovic and Dubravko Lejko's Buhas wrote in their 2024 Outlook report. Stocks remain highly valued with volatility near historic lows, while geopolitical and political risks remain high, JP Morgan said. 5. Morgan Stanley, S&P 500 price target of 4,500. Neutral position. We know the previous works of Morgan Stanley, which is not bad. Morgan Stanley expects the stock market to be flat in 2024, but sees some areas of the stock market performing better than others. The extremely narrow leadership of mega-cap technology stocks is likely to continue early next year but will eventually break down, the company said. The question investors face at this stage is whether the leaders can bring the laggards up to performance levels, or whether the laggards will ultimately overwhelm the leaders' ability to continue to serve in this difficult macro environment, Morgan Stanley said. It's a matter of whether or not, he said. We believe this dynamic will persist until early 2024 before a sustainable revenue recovery begins. Eventually, we could see plus 7% revenue growth next year. Morgan Stanley advised investors to avoid expensive technology stocks and instead focus on defensive growth stocks, typically found in the healthcare, utilities and consumer staple sectors, and late-cycle cyclical stocks, typically found in the industrials and energy sectors. 6. Goldman Sachs, neutral position also, S&P 500 price target of 4,700. Goldman Sachs expects the S&P 500 to end 2024 slightly above current levels, with stocks remaining in a moderate range beyond 2022. Our market forecasts are broadly consistent with earnings growth, as higher interest rates make it difficult to justify valuation expansion here. On a weighted basis, we see an 8% price-to-earnings ratio and a 10% total return for global equities. We look forward to next year when we will reach the top of our fat and flat family, which we have been doing since 2022, Goldman Sachs said. As long as corporate performance remains solid next year and an economic downturn is avoided, this will provide a boost to stock prices. Absent a recession, corporate earnings rarely decline. Nonetheless, the overall outlook is poor on a risk-adjusted basis due to the lack of strong earnings growth, low initial valuations, especially in the US stock market, and low equity risk premiums. No. Goldman Sachs said, it is a relative level compared to cash income. 7. NDR, bullish, S&P 500 price target of 4,900. Ned Davis Research said all eyes will be on the Federal Reserve throughout 2024 as Chairman Jerome Powell attempts a soft landing. NDR puts the probability of this happening at 70%. Low inflation could force the Fed to cut interest rates and allow the 10-year Treasury to fall to 3.5%. A soft landing should allow the cyclical bull market to continue. Our year-end S&P 500 target is 4,900, about 7% above current levels. NDR said. NDR expects the US economy to post GDP growth of up to 1.5% in 2024, adding that the first half of the year could be more difficult than the second half as the presidential election progresses. NDR recommends investors keep an eye on small cap and cyclical stocks. 8. Bank of America, bullish position also, S&P 500 price target of 5,000. Bank of America is optimistic about the stock market in 2024, depending on how much progress the Federal Reserve makes to tighten monetary policy following more than a year of aggressive interest rate hikes and continued balance sheet contraction. The reason we are optimistic is not because we expect the Fed to cut interest rates, but because of what the Fed has accomplished. Businesses have adapted to higher interest rates and inflation, Bank of America's Savita Subramanian said in a 2024 Outlook note. He said, "This also helps investors stay focused on a potential recession and focuses more on bad news than good news. We are beyond peak macro uncertainty. Markets have already absorbed significant geopolitical shocks, and the good news is that we are talking about bad news," Bank of America said. 9. RBC, bullish, S&P 500 price target of 5,000. The stock market's strong 9% rally in November may have brought forward some of the potential gains in 2024, but there is still room for further upside, according to RBC's 2024 Outlook. A key driver of expected profits next year could be a continued decline in inflation rates. Inherent in our valuation model is the idea that a continued moderation in inflation could play a large role in supporting PE multiples, RBC said. Our analysis suggests this is what happened in the 1970s. This model has been the most constructive model in our arsenal for 2023 predictions, and may be the most accurate if Santa shows up instead of the Grinch in December. The Bank of Canada added that while the 2024 presidential election could add uncertainty to markets, the S&P 500 has averaged about a 7.5% gain during the presidential election period. What these statistics tell us is that any given presidential election year is a source of uncertainty for US stock markets. Considering all the unusual aspects of the 2024 race, this seems like an appropriate way to think about the political backdrop for US stocks. 2024, RBC said. 10. Deutsche Bank, bullish, S&P 500 price target of 5,100. We know the Deutsche Bank report on stock market forecasts for next year. As inflation cools and GDP growth strengthens, the US economy is moving closer to a soft landing, which is a good scenario for the stock market, according to Deutsche Bank's 2024 stock market outlook. And even if a recession becomes a reality in 2024, it shouldn't have a significant impact on stock prices because most investors are expecting it, the bank said. The bank expects the S&P 500 to rise about 10% to 5,100 in 2024, a rise that could almost double to about 19% in a bullish scenario if the economy avoids a recession. 11. BMO, bullish, S&P 500 price target of 5,100. Another bullish forecast from BMO put the stock up more than 10%. According to BMO's 2024 outlook, even if a recession becomes a reality, the stock market will see another solid rally in 2024 as the second year of the bull market begins. According to BMO, falling inflation, falling interest rates, a strong job market and rising corporate profits are all tailwinds that will push the stock market higher next year. US stock market performance and fundamentals in 2023 followed the script in our view to set the stage for what we continue to believe will be the normal path for earnings growth, valuation trends and price performance to unfold over the next 3 years. By 2018, BMO said. 12. Fundstrat. Bullish, S&P 500 price target of 5,200. Many people may know Fundstrat Tom Lee. This is once again one of the most bullish strategists on Wall Street. His S&P 500 price target of 5,200 represents an upside of about 14% from current levels. Lee said most of the gains would be seen in the second half of the year as the Fed shifts from warring inflation to managing the business cycle. This means that there is a higher possibility of an interest rate cut next year. Meanwhile, the economy must be on solid footing. The pent-up demand suggests we are in an early cycle rather than a late cycle, Lee said. And with the continued resilience of corporate earnings and robust consumer spending, investors should realize that and start buying the stock. In case of stock market, prediction is always dangerous. Investors allocate to stocks, especially retail, which will withdraw $240 billion in 2023, he added. We expect the stock to see an unexpected rally in 2024, delivering returns of 12–15%. 13. Important point is that there exist various viewpoints and the result of prediction. Using stochastic data, modeling can be possible. With variation of assumption and policy mix input, we can have results. Please see next step. Press subscribe if you did not, also press good. SEPD TV1.